A very good evening to all of you. Welcome to Performance Optimization Simulation Session. Myself, Srijit Kakkar, and today is Sunday, 24th of March, 2019. And these are the trading ideas we will be looking into today. Reward to risk ratio, we will take as an assumption, right? Because nobody knows how the arrival would be. If you talk about the target as of now, you can see this is my supply drop based drop. So as of now, what the chart is showing me is that if the prices, they come to the zone, this opposing supply wick to wick, oops, what happened? Okay, let me try it again. So this is what the chart is showing me, that if the prices, they come to my zone, this opposing supply will be my target one. If we get a nice move, we don't get any basing in between, right? Which is a reward to risk ratio 1:1, 2:1, 3:1, 4:1, probably a 5:1 trade. But that 5:1 trade will only happen if the arrival is something like this. Right? Then we have the opposing zone here, and now this is my risk. This is my reward, which is showing me 5:1. But if the prices, they do something like this, start coming down, then start basing, then coming down. So now what has happened is the chart has formed a new supply area, which has now killed my reward to risk ratio. And now if you talk about your reward to risk ratio, you can see only have 1:1. And this is the time I would not like to take that trade. So very important that when the prices, they are coming back to the zone, that is the time we'll get to know what is the exact reward to risk ratio. As of now, definitely looks good. And we always take it as an assumption that if we have RR, whether the zone is tradable or not. And with that assumption, we have a score of 10 out of 10 for this trade setup. Now, because the quality is good, we can move ahead and start looking at the probability.